and also the exercise on the investment in associate, the one that I provide in your WhatsApp group last time. Just want to show you when there is a investment in associate. So we need to, how we're going to prepare a consideration journal entries for if we have associate together with the subsidiaries. Okay, so can we just proceed with that note? So we're not going to wait for another friend, 5 of your friends later on they can join the class. Okay, so just want to record this one for a while. Okay, please make sure that you're ready with your answer for the exercise in on associates. Okay, this time you're going to prepare the answer for that one. Okay, so we're going to stop sharing this one. Okay, so we're going to proceed with the your exercise. Do I still have that one? Okay, this is what we have for the investment in associates. Okay, so we're going to do this one together. Okay, going to prepare this one. Hopefully that you already done. You have the answer for this one. So just check your answer. Maybe some of you, maybe one of your friends going to present for the answer. Can I have one of you who are ready with the answer? Fully read? Just want to discuss your answers there. What you have. Okay, so many of you that we have here in this group. Can I have Uy? Uy, are you ready? Uy, with the answer for this one, Uy? Uy, are you there?
After it is handwritten, I haven't scanned in the PDF form yet.
You don't scan what?
I handwritten the answers. I haven't snapped the.
Never mind. Never mind. Wait. We discuss together. You just give me the answer. Just read. I'm going to write here. Is it okay?
Okay.
Okay. So now we're going to look at here because if I call you every of your friends' name, they're going to silence here. So since you are there, so can you help me with the answer? We're going to do that one together. Okay. So we're going to look at this one. Okay, we have the sales of between transactions that we have between parent and associates. So for investment in associates, we have to look at whether the transaction is related with the upstream sales or a downstream sales. Okay, maybe put it here. For the upstream sales here, we're going to look at the effect here. The effect when you have the upstream sales going to account that going to involve here is the shares in associate. Okay, shares in associate, shares of profit in associate. But if that one is related with the downstream sales, the account that going to involve here is a investment in associates. So that is a difference. Okay, so now we're going to look at these examples on 1st of January 2018. Okay, very.
Sorry, doctor.
Yes.
Are you sharing your screen?
Oh, you don't have this one, huh? Sorry. Sorry. Okay, now we have this one. Okay, you already have the exercise with you. Oui? Okay, so we're going to proceed. I cannot see some of the things that you put in the chat there. Okay, so we're going to close this one for a while. Maybe I need to look at the chat there. A bit rushing because I just started the class previously at 10. So a bit rushing. Okay, because it's that time to discuss an exercise or to discuss maybe tutorial after this that time. So I really hope that once of the student can help me with the discussion. So okay, we're going to help me with this one. Okay, so we're going to look at here. So you already have I already share with you the exercise that we have here. Okay, now I'm going to prepare the answer for this one. So I mentioned to you that the problem with the associate here is we're going to look at whether that one is an upstream sales or a downstream sales. So upstream sales here means that from associates to parents. Okay, so for upstream sale is from associates to parent. So if that one is upstream sales or upstream transactions here, account that going to involve here is shares of profit in associate. But if that one is a downstream sales from parents to associates here, account that going to involve here is investment in associates. Okay, now going to look at this one. On 1st of January 2018, Letter Ferry have 40% interest in a big cake for cash of considerations of 30 million. Yeah. So now you only have 40%. So we said that in associate, you'll have a significant influence and the share here should be less than 50%. So you cannot control the company. You only have a significant influence. Yeah. The question also to prepare the consolidated journal entry. So this is the transactions that occurred during the year. So since it's a prepare the consolidation journal entry, we start with the first journal entry. Okay, the first journal entry on this one, when you have the investment. Okay, what will be the journal entry for this one? Oi, can you help me with this one, Oi? The first one.
After the first journal entry, I think it would be investment in Big Cake Berhad. Debit investment in Big Cake Berhad. And credit cash.
Okay, credit cash, 30 million, yeah?
Yeah.
Okay, that is the first one, investment in a big cake and then credit cash. Okay, sometimes you may put an investment in associate, either one, big cake or associate. So if you have more than one associate, so better for you to put the names of the company. So investment in a big cake or investment in associate. So if you have more than one, then put it in names of the company. Yeah. So debit investment in the big cake and then credit cash. Okay. Then the second one. Okay, Big Cake declare and pay a dividends of 3 million in the year 2018. So it declare and paid dividends of 3 million. So remember that when the associate declare a dividend, so they declare a dividend is going to reduce the profit. So once it's reduced the profit here, means that it's going to reduce the investment also because the profit going to increase the investments, yeah, but this time dividend reduce the profit and the profit the effect here we're going to reduce the investment. Okay, what would be the second journal entry?
The second journal entry, I think it should be debit dividend income, credit investment in Big Cake Berhad.
Okay, debit dividend income and then credit the investment in Big Cake. How much you have for this one? The amount of dividends here?
So I took 40% times with 3 million and I get 1,200,000.
1.2 million, yeah?
1.2 million.
Okay. So please remember the amount that they paid here, 3 million is for the whole. But for Letter Ferry, the percentage of share that Letter Ferry has in that big cake here is only 40%. So please remember to time this one with 40%. So you're going to have 1.2. Okay. The next one for item number 2, big cake profit for the year here is 13,125. Okay, what will be this one? Okay, profit. When you have a profit will increase the investment. Yeah. So the journal entry for this one, Will?
I think it's investment in Big Cake Berhad, debit, and credit share of profit of Big Cake Berhad.
Shares of profit.
Yeah.
Going to the credit shares of profit. Okay, how much you have for this one?
5,250,000. 5.25 million.
5250,
Okay. Yeah.
Okay. Okay, time with 40%. This one also time with 40%. Okay, and then the next one on 1st of August 2018, Big Cake sold goods. So Big Cake sold goods here, sold to Letter Ferry. So this one is the upstream sales. Maybe I need to use another color. Okay, upstream sales, so amounting of 6 million. At the end of the year, 2 million with a profit of 20% on the selling price were held by Letter Ferry. So in this case, there is the elements of the URP, which is 20% from 2 million, yeah. And with 2 million here, so you have the amount of 400, isn't it? 400. Okay, so now this one is the upstream sales. So one that is upstream sales is going to involve account that are going to affect here is the accounts which is shares in associate, shares of profit in associate. Okay, and then remember this one, I don't forget to bring. There is an effect for the tax effect here. Okay, what will be anything for the third one? The third one, you have the source of good. Can I put it here? Okay, what will be the next one? Wait,
Uh,
can you just
I
try
def-
for this one? Okay.
I debited a share of profit in BK Berhad and
Okay.
also deferred tax.
Mm-hmm.
And I credited inventory.
Okay. How much the amount?
The share of profit is 120,000
Mm-hmm.
and deferred tax would be 40,000.
Mm-hmm.
So the inventory is 160.
Okay, so 160 come from 400s from the URP here, isn't it?
Yeah.
Okay, 400s times with 0.4, so you're going to have 160. And then from that 160 here, for the tax here is 25%. Time with 160, so you're going to have 40. So the remaining that you have for the profit here is 120. Yeah? Okay. So done with item number 3. So for those who have a question after this, I just finished with this one with OE first. Okay, for number 4, wait. Okay, we try to look at this one. Okay, 1st of September, Big Kate sold land to Glitter Ferry. So the same thing. This one is also the upstream sales. Okay, for 2.5 million. The land was bought by Big K on 1st January 2015 at a cost of 1.5. So if you look at here, there is unrealized profit of 1 million. 1 million, the difference between these two figures. Okay, the profit was included within the gain on disposal of PPE in the books of Big K. Okay, what will be the next one? For item number 4.
Doctor, I'm not too sure about this.
Never mind.
This answer. But what I did was debit share of profit in BK Berhad
Okay, same thing. Then,
and debit deferred tax,
okay,
and I credited land.
the credit land. Okay. How much the amount here? Wait, land,
Yeah. The land is 1 million.
1 million. Then,
The share of profit is 900k and 100k for deferred tax.
so this is what you have.
Yeah.
Okay, so going to check for that one, yeah?
Okay.
So shares of profit, you have 1 million. Okay, so from that 1 million here, remember that the percentage of shares that we have here, the percentage of Big K Little Ferry in Big K, how many percent that we have here? 40%, isn't it?
40%.
So suppose that this 1 million also need to time with 40%. So you're going to have 400 here. Okay, and then this one will be 400 times with 25%. So you're going to have 100 here. 100. And then this one will be 300 here. Okay. Only this one. The difference here is this one, yeah? This one. And also this one, yeah? Even though it says the amount that you're going to recognize it is 1 million, but the percentage of shares that Little Ferry has in a Big Cake here is only 40%. Same thing as this one, the one that you have here. Okay, but instead of using land, I still can accept land here, but it said that the gain on disposal of PPE in the books of Big Cake here. So you're using the word PPE here. So either you put it as a PPE or land, either one. You can accept for both of this one. Yeah? Okay, are you okay with that one? Oui?
Yes, doctor, I got it.
Okay, instead of using 1 million, supposed to be percentage of Big Cake here is only, the ferry has only 40%. So you need to time with 40%. Okay. So the credit side is the land or PPE, but the keywords given here, the profit was included in the PPE. So you just use the PPE here. Okay. So you can accept both. Okay, any of you beside thank you, Uy, for the answer. So the rest, do you have any different answer that we need to discuss? The rest, what about the rest? Any different answer that you have here? Okay, we have many of your friends there. Lee, Ng, Chang, Chong, Afza, Azim, Naura. Is it okay with the answers there? Any different answer that you have from the one that provided or discussed? The one that provided by we here? Any different answer from your answers here? Any of you?
No, doctor.
Oh, do we need to calculate for depreciations here? You don't know any information. Depreciation on what? Land, there is no depreciation, Najwa. Beside that, there is no rates given for depreciation. Okay, we don't have a depreciation for land. Okay. Okay. So, and that, let's say if you sold the depreciable asset, but we don't have any information regarding the useful life, so we cannot calculate that one. But in this case, it's a land. Land, there is no depreciation for the land. Yeah? Other than that, so yeah, the things that you need to remember for this intra-group transaction between parent and associate is whether that one is a upstream sales or downstream sales. So if that one is the downstream sales, account that going to involve here is investment in associate. But if that one is a downstream upstream sales here, account that we're going to use here is shares of profit in associate. So just remember this one. Yeah. Yeah, and then don't forget to time with the percentage of shares that you own in the associate. When you do a transaction, everything you need to time with percentage of share. In this example, every time any transaction you need to time with 40%. Yeah? Okay, done with this example. Any other questions that we have here? Do you have any other question? If not, I'm going to proceed with your garden and blue. Okay, the example in your notes, yeah? Example for your notes, yeah? Okay, so while I'm searching for that files, if you have any questions, please, I need to find the big K, big K, big K, big K. Okay, so can I just stop sharing this one, yeah? I'm going to, no question with this investment in associate. So we proceed with the one that you have example in your notes. Yeah? Okay, I'm going to share you with this one. Yeah? Okay, what do you have now with you?
The slide.
The slide. This one,
Yeah.
Okay. Okay, so we're going to look at this one, gardens and blue. So we're going to look at this. We're going to prepare this one together. Check your answer for this one. Hopefully that you already done this one. Okay, so we're going to look at on 1st of February 2015, Garden Berhad acquired 90% interest. So you have Garden and then you have Blue. Blue, 90% interest. So means that you have the NCI of 10%. Yeah? Okay, for cash considerations of 120, so COI here is 120. We just analyze the information given. On that date, the market price of the share and the return profit of Blue Berhad was RM1.50 and then 220 millions respectively. So the RE that you have in the blue, in blue here is 20. And then look at the shares capital. Shares capital, if you refer to the next one, the shares capital in blue here is 100,000. So that is what you need to know. So the shares capital here is 100,000. So altogether, the NIA net identifiable assets here will be 120. So what is the purpose of giving the market value of RM1.50? So the purpose here is to find the value of the company. Yeah? So value of blue, fair value of value of blue here based on the price, price of the share. So 1 ringgit and 50 time with 100 here. So 100 here you're going to have here is how much you have here? 100 times with 1 ringgit and 50, you're going to have 150. Yeah. Okay. So 150 here is the value of or the market value of blue. So this is what you need to know this information here because later on we use this information to calculate for the NCI because the question said that the NCI is based on the fair value. So NCI based on the fair value. How to measure the NCI based on the fair value here? Did I record this one? Oh, they can record this one. Okay, so if the NCI is based on the fair value, so we need to know the fair value or the market value of blue. How to calculate the market value of blue here? The market price or the share, the market value of the share time with the number of shares. So you have 150. So 150 will be the fair value of blue. Okay, so need to know this information later on because the NCI is measured based on fair value. Okay, so the terms, this is the statements of financial positions. Okay, the financial statement, the first one we have start with the profit and loss. So profit or loss here is already in the year 2019. So 2019 here means that this statement is for a subsequent period, for subsequent period. So since this is for subsequent period, you need to pay attention to the return earning brought forward. So this one is very important. You need to know this one. RE brought forward, because this one is already for a subsequent year. So this one is very important. You need to know this one. Okay, so this is what we have. So we're going to focus on the blue because the blue here is a subsidiary. So we're going to look at here. Okay, the term that they are using here is turnover. Okay, please be careful. Term we are using here is not sale, using turnover. So we're going to use the same term when we prepare the consolidated journal entries. Okay, the cost of sale, gross profit, operating, okay, dividends revenue, profit for taxation. So you have the tax amount. Okay, and then this is a profit after tax. So this one is another important information that you need to know. Okay, this is another one. Dividend paid by blue here because it's going to affect the NCI. Okay, going to pay attention to this figure. Okay, and then this one is already brought forward. So this is what you have. So now the next one, this is the statements of financial position. So statements of financial position, if you look at this is another key what is that? Key point to find whether that one is a subsequent years or not. If you look at here, there is an investment value in parents account means that this account is for a subsequent years. Yeah, so subsequent years is already, you know that this one is not in the years of the acquisition. This is already a subsequent year. Yeah? Once you have the investment in the parents accounts. Okay, and then look at this finance by. So finance by, the one that you have here is ordinary shares. Okay, we focus on blue, 100,000. Return profit that you have here is already return profit. Carry forward, ending balance. And current liability and current liability. So focus on these two. And the shares capital and return profit. Okay. Now we're going to look at the additional information that we have here. Okay. We're going to look at that one together. Okay, so for the additional information, blue has selling goods. Okay, blue selling goods to garden. Okay, blue to garden. Blue to garden means that this is a upstream, upstream sales. So blue going to recognize for a profit. Okay, this profit going to affect both parent and NCI. Okay, so blue has selling goods to garden since the acquisition date. In the year 2019, the sales value was 20 million. So the sales was 20 million. Okay, and then half of the amount remain unsold. Half of the amount here means that 20 divided by 2, so 10 million remain as the ending inventory. Ending inventory. In the ending inventories here, it said that the corresponding closing inventory amount in the year 2018 was 8 million in the books of garden. So we're going to have here, this one is in the year 2019. In the year 2018, we also have the ending inventory of 8 million. Yeah. Okay. We said that profit margin charged by Blue was 30% on the selling price. So this one is to calculate for the URP. Yeah. So URP, you're going to have both year 2018 and then the year 2019. 2018 is a brought forward. Year 2019 here is a carry forward. Yeah? So the amount of the your ending inventory in the year 2018 was 8,000. Then you need to time with 30% to find the elements of the URP. Yeah? So you're going to have here URP in the year 2018 will be 2.4 million. Yeah? 2.4 million. And then URP in the year 2019 will be 10 million times with 30%. So you're going to have 3 million. Yeah. So this is what you have. We just analyze item by item. Yeah? Okay, we have 3 million there. Okay, like the one that your friends mentioned there. Okay. So both, yeah, we're going to have brought forward 2.4 and then carry forward is 3 million. Yeah? Then next item that we're going to analyze. So the next one, going to look at garden. Okay, garden purchase a machine from Blue. Okay, garden purchase from Blue, same like Blue sold to garden, isn't it? Okay, so this one is also upstream, but this time is a depreciable asset. Yeah, depreciable asset. Okay, so purchase machine from Blue on 28 May 2016 in the year 2016 and now it's in the year 2019. Okay, for 25 million. Okay, 25 million. Okay, the carrying value of that machine on the date was 15 million. So Blue sold to Garden bought at 25 million. The book value here is only 15 million. So the group accounting policy is to depreciate such asset using straight line method over a remaining useful life of 5 years. So going to the remaining useful life is 5 years and provide a full year depreciation in the year acquisition and none in the year of disposal. So means that in the year 2016 for green, they're going to record a depreciation. And green going to record depreciation in the year 2016 onwards. Because it said that in the year of the acquisition. So if you look at here, it said that the remaining useful life here is 5 years. Yeah? So depreciation recorded by green here, gardens here will be 5 million. 5 million. And then depreciation, the old depreciations record based for blue here, blue will be same thing. So you're going to have here is 3 million. So based on the group viewpoints here, the depreciation will be at 3 million. But based on the gardens here, the depreciations here is 5 million. So the difference in depreciations that we have here is 5 minus 3, which is 2. So depreciation 2 here is over provided. Over provided here because gardens account at 25 million, but in the group viewpoint, the amount here is supposed to be 15 millions only. Yeah? So we have depreciations over provided by 2 millions. Okay, is it okay with the additional information? We just analyze the additional information first. Yeah? Okay. Okay, so we're going to proceed with the next one. Questions that we have here. All dividends are in the group are paid in the year 2019. So the dividend paid here, if you look at under blue here, Blue paid dividends of 3 million. 3 million. If you refer back, okay, Blue paid, where do you get this one? From the statements of profit or loss. The amount Blue paid dividends of 3 million. So from that 3 million here, if you look at here, oh sorry, For that 3 million here, we're going to allocate to parents, and then the other one is to NCI. Parents 90%. NCI here will be 10%. So 90% for this one will be 2.7 million, and then will be 0.3 million. So allocations of dividend that paid by Blue. So remember that dividends there is already net after tax. So we don't need to calculate for the tax effect for a dividend. Okay, and then it said that the tax effect on the unrealized profit for the intercompany transaction need to be accounted for. So means that we also need to consider about the tax effect, and then the tax effect here is 25% per year. So 25% per year for the unrealized profit. As a dividend, there is no tax for a dividend because dividend was paid net from the profit, from the net profit. Okay. So the first things you need to calculate the goodwill on consolidation, assuming that group use a fair value method to account for the NCI. So that's why we need to calculate the fair value of Blue. Okay, the fair value of Blue, remember that RM1.50 time with the number of share 100, so you're going to have 150. So the 150 here is the fair value of the company, and then to find for the NCI here, you need to time with 10%. So the portion or the value of NCI at fair value here will be 15. Yeah? So this is the value of the NCI, which is 15 million. Okay, now we're going to calculate a goodwill. Yeah? Okay, to calculate a goodwill, so remember that your goodwill here is the difference between COI. COI here is investment by parent, which is 120 plus NCI. NCI based on this calculation, yeah, NCI here is 15, and then minus net identifiable asset. Net identifiable asset here is a shares capital at the acquisition date. Okay, shares capitals plus RE. So RE that we have here is 20. So altogether you're going to have 120. So 120 plus 15. So you're going to have 135 minus 120. So you're going to have a goodwill of 15 million. Okay, so the goodwill amount here, put it here. The goodwill here 135 minus 120, so you're going to have 15. So since the NCI is using the fair value method, okay, fair value, so the goodwill that we have 15 here needs to allocate to parents and also to the NCI, because once using the fair value, there is a portion when the NCI is using the fair value method, there is also a portion of a goodwill for the NCI. So now we're going to allocate how much that we're going to allocate to parent and then how much to the NCI. So we go for a parents first. So the remaining balance here will be to the NCI. Okay, for parents, the COI here is 120 minus NIA, COI minus NIA. So NIA here is 90% because parent portion here is only 90%, time with 120 of the NIA. So 120 minus 108. Yeah? So means that we're going to have 12. Okay, so 12 for parents from 15 goodwill. Okay, or 15. Okay, for parents, we're going to have 12. So means that for NCI here, it's another 3. Okay, is it okay with the goodwill here? To calculate a goodwill? Is it okay? Any of you have a different answer for a goodwill? Same, yeah? Okay, was it say? Okay, so you're going to be careful with the NCI here, since NCI using the fair value, so you need to calculate the fair value of the blue. Fair value of the blue will be based on the market value of the share time with the number of shares. Okay, so this is what you have. So remember this figure we're going to use later on to prepare the consolidated. Okay, so we have done for the first one. We have done for the goodwill. So the goodwill, the total amount of goodwill here will be 15. From that 15, 12 to parent, another 3 to the NCI. Okay, now we're going to prepare journal entries. Journal consolidated journal entry on 31st. Okay, on 31st December 2019. Then prepare the statements. So many things you need to prepare. P&L. Changes in equity, maybe this one is new for you, but you need to learn about this one. And then the last one is segments of financial positions. Okay, so I just stop sharing this one with you because I have the answer in another one. Okay, so we're going to look at here. No, sorry. Just stop sharing this one for a while. Okay, I'm going to share with you the answer for this one. Okay, so this one is. Okay, so we're going to proceed with the answer. Okay. We're going to check the answer together. Please make sure that you already prepare and check the answer for this one. Yeah? Okay, so we're going to look at this one. We have done for A. For A is to calculate the goodwill. So we already calculate the goodwill here is 15 million. From that 15 million, parent 12, and then the NCI here will be 3. Yeah? Okay, already calculate this one. Okay, and then the second one, we need to prepare the consolidated journal entry. Okay, consolidation journal entry. So the first thing, we just give a number for this one. Later on, we're going to use this number. Yeah? Okay, the first journal entries here is to eliminate the COs, the COI. COI here is for parents. Yeah? Okay, every year you need to prepare the same journal entry. Going to prepare the same journal entry every year. Yeah? Okay, for parent, only for parents. Yeah? Okay, for parent, we're going to use information at the acquisition date. Acquisition date. Okay, at the acquisition date, if you look at here, the NIA here, based on two elements that you have here, shares capital is 100 and then returns earning here is 20. So we're going to prepare this one for parents. Yeah? Okay, parents, COI here is 120. Yeah? So 120 COI by parents. So you need to eliminate this one. So eliminates means that you need to credit the COI. So a debit investment, a credit investment in blue. So to debit here, we're going to debit the shares capital. Shares capital here you have 100. So 100 here need to time with 90%. Yeah? So for shares capital, 90% time with 100, so you have 19. For return profit, 90% time with 20, so you're going to have 18. And then another things that we have here is a goodwill on consideration from this one, the one that we already calculate here. Okay, this is the first journal entry to eliminate the COI. So this one, remember that for the parents here, informations for the net assets here should be at the acquisition date. Yeah? Okay, and then the next one, we're going to eliminate the sale. We start with the transaction number 1, additional information number 1. Okay. Okay, so we're going to start with the sales of inventory. Yeah? So for sales of inventory here, most of the time we are using sale, but to terms that we need to use here, you need to refer to your P&L. So in the P&L, it use the word turnover. So you just refer to the P&L. So the term that it don't use a sale, so it use a turnover. So we need to use the turnover. Previously, you put it as sale, isn't it? For a sale and then cost of sales. But this time, you need to use the word turnover. Why? Because it just using the same term that you find in your statements of statements of profit or losses. So you debit the turnover and then credit cost of sale. This one is to eliminate the sales. We're going to eliminate the sales. Okay. And then the second journal entries that we have here. Okay, the second one, the second journal entry for that transactions. Okay, going to look at this one for item number 1. Okay, the third one. Okay, which is the second journal entry. So this one is to record for the URP. So URP that you have here is half from the sales here. So half here is 10 million. 10 million times with the URP here is at 30%. So 10 million times with 30%. So you're going to debit cost of sales and then credit ending inventory 3 million. 10%, sorry, 10 million times with 30%. So this is URP for the year 2019, which is URP carry forward. Okay. And then this URP also subject to tax. So once you have the URP here, you're going to debit a deferred tax and then credit taxation expense. Why you need to credit a taxation expense here? Because the profit is not yet realized. So you need to credit a taxation expense and then debit a deferred tax. Okay, the amount of the URP here is 3 million times with 25% from the tax rate. So you're going to debit deferred tax, credit taxation expense of 750. Okay, and then remember that in the year 2018, we have the URP of 2.4 million. Okay, this URP 2.4 million, when it comes to the year 2019, has been realized. Okay, it's been realized in year 2019. So realized here means that it's going to increase the profit. So increase the profit means that increase the returns earning. So for the purpose of elimination, you need to debit your returns earning to eliminate this one. Okay, supposed to be with the correct increase your RE. So but this time you want to eliminate means that you need to debit your RE. So the amount that you're going to recognize here is 2.4. From that 2.4 here, you're going to credit cost of sale. So this 2.4 here also subject to tax. So 2.4 million times with 0.25, 25%. So you're going to have 600. From that 2.4, 600 become a taxation expense. Why it become a taxation expense here? Because the profit is already realized. So debit taxation expense, and then the difference here will be transferred to the return profit brought forward. Why is it brought forward? Because it was the last year. Okay, any questions that you have for item 1? Item 1 is about the sales of inventory of 20 million. Any of you have a different answer for the first one? Please hurry up. We don't have much time. If you have a question, please. Okay. If you don't understand or please. Any question for this one? For the first items that we have here? Any questions? Any of you? Poha, okay, Poha. Okay, Najwa said okay. Arabada rice. Okay, So if okay. So if okay, we're going to proceed with the next transactions. Just turn over only if I stated as a sale. Okay, so like what I mentioned here, whether you want to put a sales or you want to put a turnover, you need to refer to the item that they use in the profit or loss account. So in this example, the profit or loss account here using the terms of turnover. You can put a sales. It's not we can accept that one, but you just want to tally with the term that they're using in the PNL, because later on we need to do the adjustment to the PNL. So at the end when you prepare a consolidated, maybe you get confused. So to not to be confused here, you just use the term that they're using in the PNL account. Is it okay, Laura? Either one, you can accept both actually. The same thing, sales and the turnover, but this one later on you know why we need to use the same things. Okay, the same term that are using in the income statement. Okay, sales is also the turnover. We can accept that one also. Okay, so never. Okay, any other than that? Any other questions? Say out that one. So we proceed with the second item. Okay, the second item here is about the sales of the non-current asset. Okay, for the sales of non-current asset, okay, we proceed to the next one. No question. Assume that there is no question, we proceed for the next item. Okay, item number 2. Okay, for item number 2, so we're going to have this one, maybe another color. So, Okay, so this is item number 2. Okay, item number 2 here is relate with the sales of non-current asset. Okay, the sales of non-current asset, if you look at here, you sales a machinery, yeah, sell a machines here. The machines that you have here, the RP here, the selling price here is 25. The book value is 15. So you have your RP of 10 million. Yeah? The sale was in the year 2016. Now it's already 2019. So you have, this is a current year. So 16, 17 plus 18. So you have 3 years previously. Yeah? Okay, it said that based on the company viewpoint, so you're going to have here the value, because you are using the selling price, the value here will be 25 million, and then the debit with the useful life here is 5 years, so depreciations here will be 5 million. Yeah, but based on the group viewpoint, based on the book value here will be 15 divided by 5, so depreciations that you have here is 3 million. If you compare between these two, 5 million and 3 millions, you have depreciations of the difference of 2 millions here is considered as a depreciation over provided. Yeah? Okay, so or an alternative on how to calculate for the depreciation adjustments here. Another formula to calculate the difference here is the URP divided by useful life here. So the URP here is 10 million divided by useful life with 5 years is also 2, like the one that you have here. So you can calculate either using this one, the new depreciation, to find a difference here is new depreciation minus old depreciation. Okay, or you can find the URP divided by useful life, either one. Okay, there's to find a difference. On how to find a difference, we have 2 formulas here. Either you use a new depreciation minus the old depreciation, or just use the URP minus not minus, divide by useful life, because we said that when we sold the machines, the URP here, the unrealized profit, is realized through the use of the assets. Yeah? So the asset can be used up to 5 years. So every year it going to realize about 2 million based on this one. Okay, now I'm going to prepare the journal entry. So the journal entry, can I just move this one to the next page? Maybe I need to move this one to the next page. Okay, so for the journal entry that we have here, so you're going to debit your return profit and then deferred tax. Okay, better for me to remove this one to the next page. So can I remove this one to the next page? So that you can see this one, yeah? Okay, so that is a journal entry. We can look at the journal entries here. Okay, now the transaction was already happened in the year 2016. Yeah? 2016, the URP at the beginning, your RP here is already 10 million. 10 million here is in the year 2016 at the beginning. Yeah? And then you already realized 2 millions in the year 2016, because this one is at the beginning. Yeah? At beginning, at the end, you have 2 million that you realize. 17, you realize another 2 million. And then 18, you realize another 2 million. So means that now the balance of your URP here is only 4 million. So balance of your URP here is 4 million. Okay, this 4 million is the amount that you have in the returns earning. Beginning brought forward, return earning brought forward, you have 4 million. From that 4 million here is subject to tax of 25%. So 25% time with 4 million, you're going to have 1 million. So 1 million for that. So the remaining RE here is 4 minus 1. 4 minus 1 for tax. Okay, so you're going to have 3 million. Accumulated depreciation here is 6 million. Where to get that 6 million? 2 millions every year time with 3 years. 3 years here is 16, 17 and 18. Yeah? So accumulated depreciation here will be 3 years. 3 years time is 2 million. So you have 6 million, and then credit machines of 10 million. Yeah? I just finished with this one first. If you have any question after this, I just finish with the second items here. Okay, return profit brought forward, debit 3 millions. Okay, this one is a journal entry number 6. Remember, later on we need to use this number when we prepare a consolidated. This is journal entry number 6, debit return earning. brought forward 3 million, supposed to be 4 million, but because of the element of tax 1 million, so we're going to have only 3 million. Accumulated depreciation here is for 3 years, and then credit machine for the URP here of 10 million. Okay, the next journal entry number 7 here. Okay, for number 7 here is to record for a depreciations over provided in the current year. Okay, so depreciations over provided, debit, accumulated depreciation, credit, depreciation, expense. So we have that amount. Okay, 2 millions and 2 million. Okay, and then so you debit accumulated depreciation, credit, depreciation, expense. This one is also subject to tax. Okay, subject to tax. So once you have a depreciation expense here, when you credit here, means that it's going to increase your profit. So once it's increase your profit, means that it increase your tax expense. So that's why you need to debit the tax expense and then credit a deferred tax, 2 million from here, time with 25%. Okay. Any question for item number 2 on depreciable asset? The sales of depreciable asset from blue to gardens. Any of you have a question for this journal entry for item number, second item on depreciable asset? Any of you have a question? Please, yeah. Any different journal entry that you have done? Any of you have a different journal entry? Okay, so Nara, only Nara is there. What about the rest? Pua, is it okay with you, Pua? Pua, okay, Pua? Okay, so we proceed with the third one. Okay, the third items here is relate with the intercompany dividends. Okay, so Liu said okay, so we proceed with the next one. Intercompany dividend. So intercompany dividends that we have here, item number 9, to eliminate intercompany because it said that Blue paid dividends. Blue paid dividends of 3 million. So from that 3 million, you're going to allocate to parent and also to the NCI. So credit dividend paid 3 million. And then two parent going to recognize as a debit dividend revenue or dividend income. The one, okay, 90%, 90%. So going to have 2.7. And then for the NCI here, we're going to have another 300. Okay, because it's only 10%. Okay, next one, the next thing we have done with the all transactions that we have there. So now we're going to calculate for a NCI. So we said that NCI here, they have two journal entry for the NCI. One is related with the current year profit. Okay, the second one is related with the NIA, the shares of NIA. So the first one, we need to calculate for a portions of a current year profit. So current year profit, so profit for the period that is recognized by blue here is 10 million. Okay, from that 10 million, you need to add the URP brought forward. Okay, URP brought forward here is the URP that you have in the year 2018. Okay, this one which journal entry? The journal entry that we have here is journal entry number 5 here. Refer. Okay, can I use another color? Maybe which color that we have? Okay, this one will be journal entry number 5 here. Okay, this one is journal entry number 5. Okay, and then you are brought forward because that one is the one that you have in the year 2018. The URP brought forward plus 1.8. Okay, and then minus URP carry forward. URP carry forward here is 3 million. 3 million here is from journal entry number 3. Okay, this one is journal entry number 3. And then this one minus 750 here is a journal entry number 4. 3 minus 4. Okay. So you're going to have 2250. And then plus depreciation adjustment. Okay, depreciation adjustment here is journal entry number 7. Okay, 2 million. And then minus journal entry number 8 for the tax effect. Journal entry Number 8, refer back. Why we need to add a depreciation expense here? Because depreciation adjustments here is we credit depreciation. So the credit depreciation means that it's going to increase the profit. So 10 plus 1.8 and then minus 2250 and then plus 1.5. So you're going to have the profit adjustment of the profit here will be 11,050. So this 11,050 here need to time with 10%. Why 10% here? Because of the portion for the NCI. So the NCI here, debit NCI, segments of comprehensive income or segments of financial profit or loss, and then credit NCI in the segments of financial positions. Okay, I just finished with the NCI. Later on, if you have a questions. Okay, the first one we have done for the currency profit. We have done for that one. Okay, maybe we use the colors here. Okay, we have done for this one, for the shares of profit. The second one is a share for the NIA. For share of the NIA here, so remember that the NIA here, they're going to have for the shares capital and also for the RE. But this time, the RE, the shares capital is still at 100. But the RE here you need to calculate because the RE that we use here is a RE brought forward. So we need to calculate. We cannot use the 120 like the one that used for parent. But for the NCI, we need to use the RE brought forward. So for the RE brought forward, we need to calculate. So this is the amount of the RE brought forward. So the RE brought forward here, 62,900. Where to get this one? From the information which is on 1st of January 2019. Okay, so RE brought forward 62,900 from your statements given. Statements in the profit or loss or others comprehensive income. There is information about RE on 1st of January 2019. So that is a RE brought forward. 62,900. Okay, and then we need to minus URP brought forward. So URP brought forward for inventory here is journal entry number 5 here. This is journal entry number 5 because we debit the RE brought forward, so we need to minus. And okay, the number 5, and then the other one is journal entry number 6. Number 6 here is for the ORP for the machine. Also debit side, so we need to minus it. So altogether 62,900 minus 1.8 and then minus 3. So you're going to have 58,100. So 58,100 here time with 10% for the NCI. So if you look at here, the shares capital here is 100 time with 10%. So you have 10 million. RE brought forward here, altogether 58,100 need to time with 10%. So you have 5810. Okay, and then the goodwill here based on the previous calculation at the beginning. So the goodwill that we have here is 3 million. So the NCI and in the statements of financial position here will be 18,810. Okay, so any questions that you have here for this one? 9, 10, journal entry number 10. This is journal entry number 11. So altogether 2 million need to minus tax. Okay, why? Depreciation is an expense, isn't it, Najwa? Okay, so once depreciation is expense, so expense, when you transfer to the income statement, the expense, you're going to calculate the profit, net profit. So the net profit is from the profit for the year. Profit for the year, okay, in your income statement, just answer Najwa's questions here. In your income statement, you have a sales and then you minus all the expense. Okay, expense. Okay, the expense here is include the depreciation amount. So depreciation here, so you're going to have profit for the year. Okay, so you're going to have a profit. Sales or turnover minus all the expense, then you're going to have a profit. That profit need to time with tax rate. So you're going to minus for the tax time with the tax rate. You're going to minus that one. And then you're going to find that profit minus tax expense. Okay, and then you're going to have a net profit. So that's why your depreciation is a part of your expense. Yeah? So your expense is also subject to tax. So that's why you need to know how much the amount of depreciation which is net after tax. So if you look at here, the journal entry that we have here, journal entry for 500 here is journal entry number 7 and number 8. So number 7 here, this is your depreciation expense, credit side, credit side, but your taxation expense here is a debit side. So one credit, one debit. So that's why you need to minus 500. Okay, is it okay, Najwa? Okay, so okay, other questions? Okay, do you have any other questions? Any of you? Okay, please, do you have any question, please? If not, I'm going to proceed with the next one. So remember that altogether, you just give a number to the journal entry because later on we're going to use that numbers when you prepare a consolidated financial statement. See? So that you understand this one. Yeah? Okay, now we're going to prepare a consolidated statements of comprehensive income. Okay, we start with the term turnover. You just use the item that they use in the term that they use in the statements of profit or loss or comprehensive income. Okay, we start with the turnover. So the turnover here, you just total up between parent and subsidiary, and then do not forget the amendment or adjustment that we do. So we're going to have here 120 from parent plus another 70 from the subsidiary 120 plus 70 and then minus 20. Minus 20 here is from journal entry number. I give you only the journal entry. So journal entry number 2, which is the eliminations of sales. So your sales here become 170. Okay, the next one for cost of sale, you have 72 from parent plus 35 from subsidiaries, 35. Okay, and then we're going to minus. Okay, what is the thing that we're going to minus here? Is 20. 20 here is from journal entry number 2, complete with the eliminations of the sales. Yeah? Okay, or turnover. So journal entry number 2. And then what else that you need to minus? Okay, anything that relate with the cost of sales here. And then we need to add 3. 3 is from journal entry number 3. Add 3, which is the URP, current year URP. And then we're going to minus 2.4. Minus 2.4 here is for the URP in the year 2018. This is journal entry number 5. Got it? Okay, is it okay with that one? 172 plus 35 minus 20 is the eliminations of sales. Plus 3 here is the URP for current year. And then minus 2.4 here is from journal entry number 5, which is the URP last year. So altogether you have 87,600. So turnover minus cost of sale, then you're going to have gross profit there. Dividends revenue, no, you don't have that one. Okay, and then for the operating expense, okay, where this 42 come from? Okay, operating expense that you have here is 23. Okay, 23 plus what do you have here? 23 plus 21. 23 plus 21. Okay, thank you, Najwa. 23 plus 20. Then you need to minus 2. 2 from where? 2 from item number 7. Yeah, 2 from item number 7, which is the depreciation credit and the credit depreciation expense. So you need to minus. This is item number 7. Yeah, item number 7. If you refer back to journal entry number 7, okay, you're going to have debit accumulated depreciation, credit depreciation expense. So you're going to minus 2. So you're going to have 42 there. Okay, 42. Okay, the profit after tax, before tax, 82,400 minus 42. So you have 40,400. Okay, from 40 to 400, here the tax expense. Okay, look at the tax expense that we have here. Okay, the tax expense, you have 6.25 is 625, and then plus 4 from a subsidiary, plus 4, and then we're going to minus 0.75. Where is 0.75? 0.75 here is a journal entry number 4. Okay, and then plus 0.6. This one is from journal entry number 5. Okay, and then what else that you have? And then you have journal entry number 8. So 5 plus 0.6, and then plus 0.5. 0.5 here is from journal entry number 8. Okay, so your tax expense here will be 10. Okay. So, okay, and then for profit for the period here, 40,400. 40,400 minus 10,600, so we're going to have 29,800. Okay, from that 29,800 here, we need to allocate to parent and NCI. NCI portions here, we already allocate off. Okay, for the NCI, we already allocate 1105. 1105 here is from journal entry number 10. Okay, so the amount left to parents here is 28,695 here. Okay, any questions that you have here? Any questions that you have? Okay. So if you look at for dividend revenue, I missed this one. Dividend revenue, if you look at the parents that you have 2.7, and then we eliminate 2.7 here in a journal entry number 9. So means that now the balance becomes 0. So any questions that you have for the statements of comprehensive income? Any figure that you find difference there? Any of you? Okay, I just proceed because we are running out of time. Later on, at the end, if you have any questions here, okay, this one is already done for allocation for the NCI and then for parents. Okay, this is how we're going to allocate to the parents here. The parents here is 29,800 minus 1105 here. Okay, so we need to look at the next one. Okay, the next one to prepare a consolidated statement of changes in equity. Okay, for statement of changes in equity here, so this one may be new for you. Okay, statements of changes in equity. So we have this one attributables to the equity holders or a parent and also to the NCI. Okay, we look at here, there is a few columns here. If you still remember the format for this one in your 4-1 last time, okay, so you have shares capital, so change is supposed to be 19 here, and then this one to be 19 also. Okay, so going to have here, so balance on 1st of January and the shares capital, we have 200. The same thing at the end of the year's balance. Okay, for the returns profit here, so the return profit brought forward that we have here is 119,350. Where to get this 119,350? This one is from information from your P&L. P&L, so if you look at here, this one is for parent. This one is in your for subsidiaries here. Minus 18. So minus 18 here, which one? Where this one come from? Minus 18 here is a journal entry number 5. Sorry, this one is journal entry number 1. Number 1 to record for the parents. Parents portion for the RE. This one is journal entry number 5. Number 5 is to record for the URP. Ini parents UI, parents UI. And then this one is URP. And then 3 here. 3 here is for journal entry number 6 when you have the sales of the machine. Sale of the machine. And then 5810 here. 5810 here is a journal entry number 11 that we allocate to the NCI. Okay. And journal entry, this one is journal entry number 1. This one is journal entry number 5, URP. This one is journal entry number 6 for the machine, and then 5810 here is allocation to the NCI. So remaining beginning balance here is 153640, and then plus profit for the periods here is a parent portion, minus dividend paid here is 5 million, is also in the parents portion. Parents profit here, dividend that is paid by parents here 5. So at the end you're going to have 177,355. Okay, total you just total up these two figure. Okay, for the NCI here, 18810. 18810 here is from journal entry number 11. Okay, this one is journal entry number 10 for 1105, and then 300 here is journal entry number 9. So this one will be the balance to the NCI 11, 10 and 9. So that is total equity. So this is a format. Just proceed with this one to prepare a consolidated. Okay, so now I'm going to look at the statements of financial position. I just finished with this one. If you have a question of this, okay, so we're going to proceed with this one for the non-current asset. Okay, non-current asset here, where we get that 298. Okay, before this, if you look at your non-current asset, the one that you have here, so your non-current asset, we have 180 from parent plus 120 from subsidiaries. So altogether you have 300 here, 300. And then, okay, where to get this one? Okay, and then we're going to minus 10 from the source of the machineries, also of the machine, which is your journal entry number 6. Okay, this one is journal entry number 6. And then we're going to add 6. Where to get this one? And then also add 2. Where this one come from? It's a journal entry number 6 also. This one is 6, which is relate with your accumulated depreciation. Accumulated depreciation debit means that you're going to increase the non-current asset. And then this one is 2 here. Is from journal entry number 7. Yeah? Okay. This 2 is relate with the accumulated depreciation. 180 plus 120 minus 10 because of the journal entry number 6 when you credit machine, plus 6 here because of the debit accumulated depreciation, and then plus 2 here is another accumulated depreciation that is recognized in the current year. Okay, so altogether you're going to have 298. Okay, for current asset, I just finished with this one. Yeah, so current asset, you have 100 here. Okay, you have 100. Okay, and then that 100 plus 80, plus 80, plus 80, and then going to minus 2. Why you want to need to minus 2? Sorry, need to minus 3 here. 3 here, you need to refer journal entry number 3, credit ending inventory. Ending inventory here is the credit ending inventory here. Credit ending inventory. Okay, so you're going to reduce your current asset. So you're going to have 177 here. Investment here will be 0 because at the beginning your investment here is 120. 120 minus 120, this one is journal entry number 1. Yeah, so it will be 0. Goodwill on consolidation based on your calculations, the goodwill for both parent and NCI here will be 15. Yeah, so this one is for both parent and NCI here. So the amount of goodwill here will be 15 million. Yeah? Okay, shares capital here. Okay, so for shares capital 200 plus 100 minus 90 and then minus 10. 90 is journal entry number 1. 10 here is journal entry number 11. Yeah? Okay, so it becomes 200. Okay, return profit here is from here. Okay, and then also the NCI here is from here. Okay, the ending balance. Yeah? Okay, so you have total equity there. For non-current liability, okay, for non-current liability, we're going to have here 40. Okay, 40 plus 22.5. Okay, plus 22.5. Okay, and then we're going to minus. Okay, minus 0.75. Later on, I explain to you what is this one. Minus 0.1 and minus 1. And then minus plus 0.5. Okay, so the non-current liability is related with the deferred tax. Okay, deferred tax. Okay, these two is parent and subsidiary. Just add together parent and subsidiaries here. Okay, and then this 0.75 here is you refer to deferred tax. This is journal entry number 4. Okay, 1 million here is a journal entry number 6. Because debit deferred tax, okay, number 6 and then plus 0.5 here. 0.5 here is journal entry number 8. We credit deferred tax, so we add that one, yeah. So altogether, we're going to be 61,251. Okay, for a current liability, so current liability, you just total up that two figure, 24.2 plus 7.6. Okay, so at the end, you have this figure. Okay, any questions that you have? Any different figure that you have? Have a look on this one first. If you have any different figure or you cannot understand for this one. Okay, it's already 11:22. Okay, so any questions that you have here? Suppose that we need to end the class by 11:20, but I'm still around if you have a question. Okay, for this one, you just copy the answer first. Try to understand the figure. If you can't understand the figures there, we're going to allocate about half an hour. Okay, maybe not half hour, 15 minutes on this coming class. Which figure that you don't understand. And then for the next class, we're going to discuss your tutorials. Tutorial 1. Maybe it take half an hour only for tutorial 1. And then we're going to continue with chapter 3. Yeah? So please make sure that you have a notes for chapter 3. Yeah? So for those who are still do not have a class after this, still want to ask a questions, I will be around until 11:30. For those who want to leave the meeting, you can leave the meetings now. Okay. So sorry, we are quite running off time about this one. To me, when we have a discussions, it really takes time. So hopefully that for the next class, you have a tutorials. It won't take long times as long as you provide the answers. We're going to discuss that one together. Okay, make sure that we try to participate so that like the one that we do for we give the answer. So maybe next class you're going to call some of you to give the answer for the tutorial. So it won't take much time for that one. Yeah? Okay, so any of you have a question? I'm still be around, but for those who want to leave the meeting, you can leave the meeting. Yeah? Okay, any questions that you have for these examples? Any of you? Nora said, okay, no question. Make sure that you understand since there is no questions there. Okay, what about the rest? Any of you still have a questions here? I'm still be around here until 12. Not 12, 11:30. No, it's only 1.5 hours. Quite rushing, yeah? Okay, no questions. So try to look again the answer and try to okay. Investment in associate or not. Okay, investment in associates here is one your share is less than 50% is considered as associate. But make sure that between 20 to 50, less than 50, yeah? If that one is 51%, is considered as a subsidiaries. Okay, Nara, is it okay? Look at the percentage of share that you own. If that one is less than 50 but more than 20, consider as a associate. Okay, other than that, any other questions that you have here? Okay, any of you still cannot scan, not yet scan for the attendance? Okay, can I stop sharing this one? For those who wants to scan for the attendance? Yeah? Okay, if you have any question and then you need to rush for another class, you can ask for the next class. And maybe we'll allocate for the first 15 minutes about these questions again. If you have any questions on this one, Okay, I just start sharing this one for those still want to scan for the attendance. Yeah? Okay, but I'll be around if you have any questions. Yeah? I know, okay, I know. The rest is okay.